The following content has been generated with artificial intelligence under minimal human supervision. The data presented may contain errors or inaccuracies. The opinions expressed in this content do not necessarily reflect the vision, position, or values of DigiAll. We recommend verifying critical information with additional sources before making decisions based on this content.
Welcome to DigiAll Tech News. Today is Monday, June 8th, 2026. I'm Kylie Brooks, and this is where technology becomes clear and engaging. The AI boom is now so large that stock markets, data centers, and corporate spending are all being tested against one unresolved question. Where is the return? Intel's new chief executive Lip-Bu Tan is betting that agentic AI could give the struggling chipmaker a more CPU-friendly opening. SK Hynix has signed a multi-year technology partnership with Nvidia to build advanced memory for global AI data centers. Bybit is opening tokenized retail access to IPOs, starting with SpaceX, as crypto exchanges push deeper into traditional equity markets. Asian tech shares extended their AI-linked sell-off, with SoftBank, Samsung, and SK Hynix all under pressure. Let's start with the story underneath almost every tech story right now. AI is no longer just a product cycle, it is a market structure. The S&P 500 is up nearly 80% over 5 years, and 41 AI-related stocks now account for nearly half of the index's market value. Goldman Sachs projects AI spending on everything from data centers to chips rising from $765 billion in 2026 to $1.6 trillion by 2031. Adoption is real too. McKinsey puts corporate AI use at nearly 80%, up from 33% in 2023, while ChatGPT has reached 1 billion monthly active users. Here's what keeps this from being a simple victory lap. Token costs, energy limits, and data center buildouts are becoming the bill for all that ambition. With 23 gigawatts of data center construction underway in 2025 and 100 gigawatts expected to be added from 2026 through 2030, the bigger question is not whether companies are spending. It is whether productivity, power grids, and real customer value can catch up before investors demand proof. Now to Intel, where the turnaround story depends on a subtle but important shift in AI workloads. Lip-Bu Tan took over as chief executive in March 2025, at a moment when Intel badly needed a reset. His bet is that agentic AI systems, meaning software that can complete tasks on a user's behalf, will create more demand for CPUs during inference. Inference is the day-to-day running of AI models, not the giant training runs that made GPUs the star of the first wave. That matters because Intel has been looking for a credible path back into the center of the compute conversation. But this is not a quick fix. The opening is real only if Intel executes in a brutally competitive chip market, and if agentic AI actually shifts enough work toward the kinds of processes Intel can supply at scale. So the listener question is simple. Is AI rescuing Intel, or just giving it another chance to prove it can move fast enough? Here's the key context on Nvidia's latest partnership. The AI factory race is also a memory race. SK Hynix has announced a multi-year technology deal with Nvidia to develop advanced memory chips for global AI data centers, with Jensen Huang describing the partnership as lasting more than 2 years and including an option to extend. The focus is high bandwidth memory, or HBM, the specialized memory used in Nvidia's AI accelerators. That supply has become a pressure point as Nvidia pushes beyond data centers into robotics, personal computers, and AI supercomputers. SK Hynix is competing with Samsung Electronics and Micron Technology, and all three have been qualified as suppliers for Nvidia's Vera Rubin platform. In practical terms, this deal is a reminder that the AI stack is only as strong as its tightest bottleneck. GPUs get the spotlight, but without enough advanced memory, the factory does not run. Now this is where crypto and traditional finance start to overlap in a very direct way. Bybit says it will offer retail investors tokenized access to IPOs at the offering level, beginning with SpaceX using Payward's X stocks tokenization service. Users can subscribe without opening or maintaining a traditional brokerage account, and the SpaceX window runs from June 7th through June 11th, with final allocations set between June 11th and June 12th. Tokenized shares are scheduled to start trading on Bybit's spot market on June 12th. Demand is the magnet here. SpaceX has drawn roughly $150 billion in investor demand, about double the $75 billion it is seeking to raise. Kraken opened comparable access through X stocks in more than 110 countries earlier in June. The promise is broader participation in hot listings. The trade-off is that tokenized equity still raises hard questions about custody, regulatory treatment, settlement, disclosure, and what protections retail investors actually have when a stock-like asset lives inside a crypto exchange. And finally, the market mood around AI is getting a stress test in Asia. On Monday, June 8th, Asian tech stocks extended their sell-off after the tech-heavy Nasdaq fell more than 4.5% the previous week. SoftBank Group dropped more than 7%, Samsung Electronics fell 5%, and SK Hynix fell 2%, helping push South Korea's cost-buy index down as much as 8%, because Samsung and SK Hynix together make up more than 40% of that benchmark. A UOB note put the broader damage at about $1.8 trillion in erased S&P 500 market value. The important nuance is that some of these same companies are central to the AI supply chain, including memory and infrastructure. So is this a rejection of AI itself, or a repricing of how much investors were willing to pay for AI exposure? For now, the price action says investors are becoming less forgiving when the narrative is expensive, and the payoff is still being measured. Today's through line is pressure. AI is pulling capital into markets, forcing Intel to look for a comeback path, making advanced memory a strategic asset, tempting crypto exchanges into IPO access, and testing investor patience across Asian tech. The technology is still moving quickly. The harder part is proving that the economics, infrastructure, and investor protections can move with it. Thank you for staying informed with Digital Tech News. We'll be back with more updates as they develop.